Hi, this is Krishna Merchant, and we have with us Ami Shah to join us on the market roundup. It was a roaring day for Indian equities. The Nifty scaled past 6,000 psychological mark, highest level since 2 years, as US was able to avert a fiscal cliff crisis over there. The House of Representatives passed a budget deal which lifted equity markets all over the world, including India. The Sensex was up around 133 points at 19,714, and the Nifty was up around 42 points at 5,993, a kissing distance away from the 6,000 level which it crossed intraday. So Ami, last year we saw a spectacular rally in the Indian equity market. Sensex was up almost 24% as foreign investors poured in over $20 billion. Do you think that kind of money can pour into India this year and the rally may sustain going forward?
Well, we need to keep our fingers crossed. Though we are poised to rise from here, we are just a kissing distance away from recording a new high. That said, there are a lot of risks around. And firstly, we have general elections coming up next year. So the budget and other measures by the government could end up being populist rather than in favor of reform. So that needs to be closely watched. Another thing is, a lot of hopes are pinned to the fact that RBI may cut rates later this month. But in an unlikely event that RBI does not, we could see a huge sell-off.
So talking about the rate cut, cyclicals did outperform today. BSC, banking, auto and capital goods, all of them were up over 1% each. From the banking space, ICICI Bank and State Bank of India were up around, again, over 1%. While from the capital goods space, BHEL gained 2.4% and L&T was up around 1.5%. From the auto space, Tata Motors was one of the top gainers, up 0.5% after Bank of America Merrill Lynch gave a buy rating on the call on the stock, citing that JLR will continue to perform well, the JLR unit. Also, Maruti Suzuki was up 3% despite a dip in sales in the December quarter. And also Bajaj Auto was at a 52-week high, up almost 3.1% after December sales climbed to an all-time high. So what kind of sectors are expected to do well next year, and will the cyclicals do well because of the rate cut?
As we discussed, all this is happening on the hopes of RBI adopting a dovish stance rather than a hawkish stance. But in an event that it goes the other way around, we could really see a sell-off. But for now, yes, it looks optimistic, and obviously supported by an improvement in our economic growth. Yes, it looks like the cyclicals will be well next year.
So talking about the economy, PMI data was out today, the manufacturing PMI. It was at a 6-month high, buoyed by a pickup in new orders. Going forward, we need to see how the earnings season pans out. CRISIL came out with a report showing that the EBITDA margins are expected to remain firm while the top line growth continues to see a crimp because of the weakening demand environment. So let's hope that the market rally continues and wait and watch what 2013 has for the equity markets. For now, thank you for joining us, and join us on livemint.com to get more updates.